Hey everybody, this is Jose Blasco. We are about to get started. Minute to go. Sound check, please. So we start on time. Quick message on the chat box we do, so I know that you hear me well. I know all is good with technology, sound, and everything else. So we can get started. Please, quick message on the chat box. This is the simplest form of a sound check. Thank you so much. Thank you, Maka. Thank you, Mario, Christian. Thank you so much, everyone. Very cool. Okay, so I will turn on my video stream so I can say hello from the bottom right side of my corner. I'm not sure why the video stream is not looking good today. There is like something there in the background. I'm not sure why. Strange. I may end up turning off the video because it's kind of a bit distracting like this. So I'll turn off the video if you don't mind today. Sorry for that. But anyway, time to get started. 10 seconds to go. Ahmed, how are you? You got an Elliott wave indication today on your CRM trade. Ahmed, I was checking earlier. We'll talk about it in a moment, okay? So anyway, welcome to the session, everybody. This is Jose Blasco, Options with Options, September 16, 2021. The disclaimer is being highlighted on the upper left side of the screen. Please read it carefully. It is indeed important information, so please read it carefully. We are going to be trading options. Obviously, the agenda, we're going to be looking at the market, reviewing the trades that we have, talk about trade management, if any, and from there, we'll look into finding new opportunities, okay? That's the plan. So let's begin. Here we go. So here's the S&P, okay? So what do we have with the S&P? Well, yesterday we talked about how, based on the climate statistics that we have, we were supposed to get into, soon enough, if you wish, blue climate, okay? And notice how yesterday the market ended up, with this still red dot, but like no vertical line on top of it, okay? Meaning that we were right there about to change climate. But guess what? The market opened today, and so far the market is dropping by 0.72%. And this is bringing this vertical line to be back up. Actually, just like yesterday, we were looking at 0.7 something, so 0.72 today. So again, we are still in this down climate, okay? We need to be careful there. Implied volatility has been rising today. The put and call spread remains more or less as wide as yesterday, a little less. Yesterday, if I'm not mistaken, it was 1167 versus 1567. So today the puts have lost a little bit of steam. Again, pointing at this potential up market that should start at some moment in time based on statistics. But we still don't have that situation playing out in a clear manner. Yesterday, we did end up have a UFO form. I'm just rewinding the market a little bit. Okay, and right now that UFO is being tested. Okay, so if I fast forward to now, right, so market open inside the UFO, and now you can see how there is a little bit of a fight there. Many orders got filled, the UFO is gone. Okay, so many orders got filled, so that's important to keep in mind. But at the same time, you can see how we are having now indecision candles that are forming. So again, could be the sign of a turnaround and more green UFOs to show up, leading into a new change of climate. We got an Elliott wave indication here, just like a purple color one, just like the one we had here, that led to a change of climate. So this may be the one that leads to the new blue climate that is likely going to be produced based on statistics. But again, this is not happening yet. Okay, so we need to be careful with acting too strong, with too much positioning to the long side. We need to keep that in mind because the evidence is still red color instead of blue color. Okay. When we look at the VIX, okay, the VIX has rallied back up today. We are talking about VIXs of 1936 at this moment in time. Okay, 1936. So in other words, the fact that the market has been falling today is bringing a little bit of life into the VIX. So very quickly today, I'm going to start getting into finding more non-directional trades. Yesterday I found one But if you recall, when it comes to executing it, just to get in the account, I was using a market order, and you probably remember what happened, right? I got a terrible price on the field. We should never use market orders, as I keep saying all the time. And yesterday was a great example of what not to do, okay? So today I would like to start planning on an iron condor a bit earlier in the session, so I don't need to rush into it. Yesterday some of you said it was a bit fast, so I want to do it again so the process sticks. So that way, you know, in the following days, during this week and next week, until we meet again next Wednesday, you guys can practice the process as the process is well understood, okay? So great that the VIX is going back up a little bit in the 19 point something, so we can do that again. Maca, Christian didn't get filled, Maca didn't get filled. Okay, yeah, I mean, the fact that I got this terrible price on the simulation platform on Thinkorswim represents that as Thinkorswim was trying to emulate the markets, their algorithm on how to predict market behavior predicted an extreme lack of liquidity and hence my very, very bad price. So I am not surprised you didn't get filled, and to be honest, in that sense, it's a good thing, because then you didn't have to suffer a very disappointing price. Okay, so that's great. But anyway, when it comes to market analysis, really not too much more to comment on. I'm going to bring the positions here so we can discuss our positions. I am looking at the midpoint. Yes, looking at the midpoint. So what do we have first with Intel? We are still in that very similar position as yesterday, $29 net profit for the trade. So if I look at Intel, and we need to be looking at a 2-day chart here, I believe, yes. So Intel is falling a little bit, is 1.48% lower than yesterday. So it's just falling a bit. You probably remember yesterday we had an action on the Intel trade, an action which implied that we took our long call and we sold the 60 call against. Okay, so that 60 call, it's making $2.5. So you know, the fact that Intel is not moving our way, it's obviously not good for the trade. But the fact that we sold an option against Intel yesterday, it's indeed good. We have an order to buy to close at 5 cents. Okay, the mark price for this trade is 12.5. So you know, we sold it at 15. That was our trade price. It's currently trading at 12.5, which is the reason for that $2.5 profit. Okay, if it drops to 5, then we're gonna close it, and then we'll be ready to sell it again. Okay, which is the order I have in top on the top, and therefore looking to take advantage of the ups and downs in that particular stock, as the stock potentially starts moving towards the target. Let me try my video feed one more time to see if that's working fine now. There is something weird behind me. It seems that my chroma key screen is not working fine today. I'm not sure why is that. Let me try to fix it very quickly, because to be honest, I don't like that we are not kind of like seeing each other well. See, let me try to fix that problem. No, there is an issue there. Probably with my lighting or something like that. Okay, so guys, I apologize for the video stream, but it's not looking neat, so I'm just gonna turn it off. Okay, sorry for that. Anyway, so we're gonna continue. We're gonna continue with the other trades that we have. Okay, so that was Intel. You guys stop me if we need to discuss anything further. Okay, ADM. We talked about that yesterday, so I'll discuss it very quick as well today. So ADM yesterday, as you can see, started moving very, very, very strongly. So today it's dropping by 0.35%. So again, what we want to see really is we want to see ADM to keep going. If I'm not mistaken, we said if we reach 67.7 or something like that, then this trade is gonna break even, and it would be a great time to close it, and we avoided a loss. If ADM falls down and gets back to this bottom target, so then we're gonna be in business again and make a profit with this hedging trade. Okay, the reason for this trade was to hedge the long positions in the portfolio for the ones of you attending the session for the first time, just so you know. Okay, yeah, so that's what we have at this moment in time. So nothing extra to comment on ADM unless you guys have any question. The next trade for us to review is CL. Okay, which that one it's struggling a little bit to pick up direction. Okay, so again it's testing that speed bump area, a speed bump area where when we enter the trade, if I rewind to a few days ago, so when we entered the trade, we had that speed bump area lining up with a green UFO. Okay, well, when we look at it today, of course that UFO has produced some bounces and reactions, but at this moment in time, that stock seems that wants to find support by going a little deeper into that speed bump area. Okay, so concern is that the UFO is gone from the screen, meaning that the app understands that lots of on-field orders got filled, and that's not a good sign. But again, it's not a surprise that this is happening because the S&P is falling, stocks are fragile, they depend on the S&P, on the sectors, on the groups, and therefore that stock is being pushed down. The expectation for Colgate-Palmolive is that the moment the S&P turns around and goes back to a blue climate, we are likely going to see strong moves to the upside on that stock, because remember that stock belongs to a strong sector and a strong and is strong itself. So so therefore there is nothing to be too concerned about really. It's now playing the waiting time. There is not much more to do on this trade, okay, with our long butterfly on that particular trade, okay. Cool. What else? The Iron Condor that we set up yesterday with WHR, with Whirlpool. So let's take a look at this Iron Condor. And I'm going to be looking at your chat box in just a moment, guys. So this is the Iron Condor that we put together yesterday. So if I drop to a 55-minute time frame, so we can see that that stock, to be honest, is being hammered today with 1.81% down. So pretty strong move to the downside, but again, it's within the zone, so all of this is fine. Now the question is, do we need to do anything about it, right? And the answer is not yet, okay? Remember, this trade is using September 24 expression, okay? And based on what we can see, if I zoom in, okay, so this is September 24 expression. This is the bottom part of our range, where beyond there it's a problem. And notice how right now this projection line, which projects the statistical range for the stock, it's still above the purple line. So we still have a little bit of breathing space before we need to get into tweaks, okay? In this case, it seems that most of you are not in this trade, so just to save time, I won't get into it. But indeed, if next week we are in a situation where we need to act on it, of course I will explain it properly for educational purposes, and that way you know what to do. But again, basically, this trade is made of on the call side, selling the 235 and buying the 237.5, right? So if we break the bottom part of the range, we're gonna have to roll those calls to a lower value. Okay, so we're gonna take the calls that are currently here and we're gonna close them and sell new calls lower than that. Okay. And we've done that before, so I will not put time today into explaining it, so we have more time for new trades, and I will get into explaining that next week if needed, okay? But so far, nothing to do, because statistics still suggest that the stock is doing its thing, and the statistical range is still within the purple lines, even though the bottom one is close to be challenged, but not yet, okay? Cool. Okay, so that's all for the review. You guys let me know if there are any questions. Do not be shy. Okay, do not be shy. I see a few messages here and there, but not too many. So this is your time for you to ask questions. And I want to read the chat box. And also, before I read the chat box, I also want to take a look, even though it's not a trade I have, but it is a trade that we analyzed yesterday as a suggestion from Ahmed. And you can see that, you know, when we looked at this trade yesterday, basically we were here, or even before the market closed, we were here, okay? Well, actually, that was yesterday, okay? But before the market closed, we didn't have the Elliott wave indication, so it looked like that. But as the market closed yesterday, we had this midterm Elliott wave indication. The blue color is midterm, suggesting a final target of 272 point something, which is, you know, it's indeed the area that we selected for target. We were shooting for 268 as a target, which is the UFO, isn't it? So this indeed increases the odds for this trade to work well. Not only it was reacting to a trend line and all of those different things, but on top of that, having an Elliott wave confirmation there, it's indeed something that may be motivational for many more traders to get in after you, Ahmed, and therefore to have the trade, to have the price movement to continue to the upside, traveling towards the target. Okay, so just wanted to point out that since we didn't have that on the screen yesterday as we were planning the trade. Ahmed, price dropped very quickly from 0.9 to 0.2. Got it. Joe, the spread was way too wide to get filled in the mid. And that, Joe, you are absolutely right. But at the same time, precisely when the spreads are so wide and no one is getting filled, you often, maybe often is too strong as a word, but you surprisingly often get filled, in the middle of the spread, while the spread is very wide, precisely because no one got filled, and those market makers, they need some executions. Okay, so sometimes patience pay. You leave your order up and all the way to the end of the day, and then surprise, surprise, you just got filled. So you never know. But indeed, the fact that I got filled at this terrible price yesterday, as you saw, indicates that the simulation tool from Thinkorswim was predicting, poor liquidity. And again, they do that using an algo which is pretty well done, because they are looking at statistics when it comes to time of the day and bid size, ask size, all sort of things, trying to predict that if someone places an order, are you likely going to get filled or not, or what? Okay, simulated accounts always tend to be a bit more optimistic, but within being optimistic is a fair simulation of what could happen in the real market. Which is different, for example, with TradeStation, where to get filled on simulated trades for options, you have to use market orders always. The TradeStation doesn't run that kind of intelligence on the simulated account, and therefore your limit orders almost never get filled on the simulated account with TS. Okay. Siderman, I didn't get filled on Intel either. You didn't get filled on the 60 call. Wow, that's that I would have said that was easier to accomplish, but I guess it's what it is. Joanne, how are you? Good to see you. Maka, does it make sense to try it again today? Try it again for what? For the WHR or for the Intel? Because for the WHR, we're gonna plan trades now. So again, if all market conditions from yesterday are met, then yes. But if market conditions are not met, then no. And for the one with Intel, today is going to be a tough one because Intel has been dropping. So probably you won't get the premium we were shooting for yesterday. Okay, so I guess that if you didn't get it yesterday, then you need to treat today as a new day and redo the homework to revalidate your trades. Okay, Christians, how do I generate a speed bump on the chart? Yes, to generate a speed bump, you just pick the speed bump tool, which is that drawing button here. Okay, you can also have it here, the same drawing button. Okay, and by the way, for the ones of you that may not have the drawing tools I have here, it's because you have that triangle on the top that says hide toolbar. Maybe you clicked it, or by default it comes as clicked, so you can always click it to the right, and then the toolbar expands, and then you can right click on it and you can select the line toolbar or whatever it is that you want to show. You can customize it in here. Okay, so keep that in mind. Ahmed, I use the scan or top for reversal signals 3 bar up. Got you to find CRM. That's indeed, there are so many scans that, I mean, we'll spend time with that, guys, because there are so many scans that are so useful, guys, so useful. At the same time, I don't want to drive you crazy. We meet 2 hours a week, and we do a lot already, so I don't want to drive you crazy. But indeed, starting with those sessions we're gonna do over the weekends, starting in October, I will be getting into other type of filtering and other scans that I don't use in the sessions, but that are indeed very smart and very useful as well. Okay, so well done, Ahmed, by doing your own research there and find that reversal signal. Okay. Yeah, so Maka, you were talking about WHR. So yeah, so as I said, we're gonna start from scratch with non-directional trades. If WHR shows up, we could look at it, but if not, then we don't. Okay. Good, wonderful. does it scan for unusual options activity? Yes, indeed. You know, with the matrix, you could scan for options contracts. So you just select, I want to scan for option symbols, okay? And then you come into the options filter and you define what to you is unusual activity, okay? So maybe you want, you know, to you unusual activity means that you got, you know, X amount of contracts, 5,000 contracts, okay? As average volume, or maybe you are looking at an implied volatility of, you know, 88, you name it. So you need to define what is it as unusual activity, and then when you scan, those contracts will, oh, sorry, I forgot to check mark this one. So then your contracts will show up with those particular characteristics. So here's the 60 call on ADM, for example, meets that criteria, okay? And there are many more, right? The 60, the 61. So you need to talk about what is it that you want. Maybe you only wanted the money, or you only want, you know, delta within whatever, while you're looking for that unusual activity, right? So you gotta define that, and then you can scan for whatever you want here, okay? Mac, I'm looking forward to the sessions on the weekends, since I'm so new to options. Yes, to be honest, I'm super excited as well that we have a little bit of extra time. You know, a long time ago, we used to spend one session a week talking about options, and I was keeping things as simple as possible because it was only one session. Then we made it two, and I think we've learned many things since then, isn't it? So now we're gonna add the weekends on top of that. So, you know, again, it's I think it's gonna be powerful for you guys and lots of fun for me too. So counting on you guys to joining me on those Sundays. Anyway, so let's begin, guys. We are gonna be looking for trades which are non-directional. So I'm gonna do the same thing I did yesterday. First, looking for high volatility, implied volatility mean to be greater than 80. Okay. We are going to be looking at nothing on stock filters, the scan list. I need to use my scan list, penny increment options, strength, neutral, daily, neutral, weekly, earnings, 10 days or more, okay, and nothing with auto climate or the stock price range. And when we do that and I scan, I got nothing with that particular condition of mean greater than 80. So then I go for option number 2, which is mean minus historic volatility above 2 standard deviations. Remember, we have 3 ways to look at expensive options. So this is technique number 2. Okay, so let's see. And now we got 2 stocks that show up, Caterpillar and JPM. So let's go ahead and take a look and see if those will give us an okay or not. Okay, so just gonna float that window here. Here we go. So this is Caterpillar, okay, and I'm just gonna move here, okay, so we can have a proper view and understanding of everything here. So I'm just gonna remove the lines, so we start fresh, okay. And the first thing to check is earnings date, which is on the 26th of October. Therefore, I could use up to October 22nd for me to plan on a non-directional trade, okay. So with that clear, October 22nd is the maximum. I am getting my spread select, making it full screen, Caterpillar, CAT, looking for spread types, short, iron condors, and nothing else. That's what we're looking for at the moment, okay? And expiration dates, we said up to October 22nd, so we'll do 22nd, 8, 1, and 24. So we're gonna select all those expiration dates and see what's possible. And then we're gonna look at the minimum risk possible, which is 2.5. And then we're gonna look at maximum risk. This is a $200 stock, so I'm gonna go for $10, which is $1,000 risk maximum, which is not my ultimate preferred way on how to add risk. I prefer to cut it at, like, let's say 500 per contract. But again, with the further out expiration dates, we may not have too many strikes. So because it's a $200 stock, I'll go for $10, okay? And then we'll evaluate that as the spreads are built. So with that in mind, activate the right filter I want to use, which is my template for iron condors. Click OK. And now I'm just gonna create 99 iron condors, okay? Update them and sort the column fail or pass to see what happens, Okay, so I got a bunch of passes all the way to here. All of these, as you can see, is September 24, and then below we got October 1st. So let's concentrate on September 24 first, since some of those conditions are passed. Okay, I am not looking at ADX because, you know, since I am utilizing the strength level, this is a way more complex way to look at price movement and than simply an ADX is looking at so many different things. And somehow ADX is built in because indeed that strength level is looking at impulses, corrections, things like that, and therefore if you were to plot an ADX, you would, you know, see that ADX is basically low values. Okay, so if in your analysis you want to double check the trades with ADX, you could do that. There is nothing wrong. With TradeStation, I used to do that. You may remember that. So absolutely nothing wrong with it. Pick a low ADX value, indeed less than 25, and that may give you an extra confirmation. But the strength filter that we use on the matrix is so powerful that is, I would go ahead and say, way better than ADX. So there is no need for me to do that. Okay, even though if that's part of your rules, Joe, nothing wrong to add it, even though I would say I didn't test it, okay, but 99% of the times when I get a neutral zone trade, you're gonna get a low ADX. Okay, so basically looking at the ADX is gonna waste your time because you will always have a low ADX every time it's neutral. Okay, so that's what I'm trying to say. Yes, absolutely, I can send the templates, not a problem. You just need to email me, Christian, if you don't mind. Send me an email and I will respond back to you, and I will indeed share those templates. I will produce more templates, by the way, as we go deeper into things, and always happy to share that with you guys. We will also, you know, end up creating a section on the website, something like that, so it's a bit more handy for you guys. But again, we are just launching top. Okay, by the way, you probably have received and have seen that we've sent an email where we are doing an official presentation on the 24th of September. So again, you know, you guys being the pioneers, you know TAP exists, but you know the world will kind of find out at the end of the month. Okay, so we still have room to get organized. In the meantime, just rely on me, guys. Okay, shoot me an email, and you know, happy to share everything, guys. So anyway, so let's look at September 24. Okay, and September 24 is there, and so what I want to do as I position my mouse on this vertical line, you can just basically look at what those values are, 213, or if you want to be more precise, just look at, in this case, the red numbers, which is the furthest away numbers from the current price, and therefore we are talking about 213 and 193. Those are the numbers we are looking at as a statistical range. So in other words, I want my break-evens to be at least 213, okay, and if I look at my September 24, I got 213 right there, okay, 213, and the bottom part is 196, okay, 213, 196, which this one fails, because if I look at the bottom part, it's not, sorry, I moved my, here we go, oh, sorry, I moved my mouse too quick. So 213, right, to 193, so 193, let's call it 194, is lower than 197, right, 196.95. So the upper part of the range is fine, the bottom part is not fine, and therefore September 24 does not have premium enough to justify the statistical range for the trade to have a trade that meets our criteria, which are the parameters in the filter. Okay, therefore I'm just gonna close that with October 1st, okay, and restart again, okay, rebuilding those trades, so update. And now I'm gonna start with October 1st, and I'm gonna build 99 iron condors, and again go ahead and sort. Okay, so now we got October 1st, we got many October 1st all the way to here, which is October 8th. So let's take a look at October 1st to see what is the statistical range. So we are now moving to the next vertical line, okay, where now the top here, it's 217 to 190. That's the statistical range, 217 to 190. So the question is, do we have anything which is 217, 215, 228? Okay, so 228 is good, but I'm not happy because I can see some of the strikes have not traded today. Okay, some of the strikes, one strike has not traded today. So we're gonna run into issues with liquidity. And then we got 213, 216, 216.43, but okay, wait a minute, I'm going too far. This is October 22nd, okay? So in other words, we are not getting the premium we need either with October 1st, okay? So no good. So we're gonna go for, okay, we're gonna go for the next one, which is utilizing October 8th, 15th, and 22nd. So let's see what that will do. Creating 99 iron condors of that sort. And as I do that, okay, I got a few October 8s. Okay, so what do we need with a, oh sorry, I didn't sort the filter. Here we go, now I have it. So we have 4 October 8. Okay, the greatest one is 216, so that's not looking good because, you know, already October 1st was 217. So October 8, it's now 220, okay? So we are not meeting the 220. The maximum we got, it's 216. So we are going to go ahead and ignore October 8 and try October 15. Okay, so October 15, 99 iron condors, sort the pass fail column. We have a bunch of October 22nd which meet the rules. So let's go ahead and take a look if we can also see that on the chart. So October 15 right there would be 222 to 185. Okay, so 222 to 185. So let's start looking at the 222. So we got 226. Okay, 226 to 178. Okay, and what did I say? Wow, that was, looks good. This one is good. Okay, 226 to 178. So I'm going to go ahead and create a risk graph so we can assess that later on. So I'm putting it here. So this is one possible iron condor. 231 and 179. So this one has a little bit better room to the upside, but now when you look at the return on investment on the expiration date, instead of 45, it becomes 25. And so why would I do that? I don't need that because this is already meeting my rules when it comes to the statistical range. So I'm going to stick with that one. I'm not going to go for the next one. If I keep going low, wait a minute. It's October 22nd. Am I looking at this right? October 22nd. Yeah, 224 and 183. Okay, so that's good. It's I think I said 222 at some point, but it's not 222, it's 224. Okay, so now if I keep going down, okay, 226, 188. That one is not good. The bottom part is too high. So far we have one. Okay, and with the October 15, all of that was failing. So October 15 was not returning anything good. So it was October 22. It's my bad. I didn't notice it was looking at October 22. In any case, it doesn't change the result of my peak. Okay, so we have one possibility for an iron condor, which is this one here, which does meet the rule. Okay, it does meet the rule. Little bit of a wide spread there. Okay, pretty wide actually, but again, it's what it is. And if we get filled at the midpoint or even less, it's indeed justified a risk, because the maximum risk of this trade at this moment in time is $343.50. That is if you get filled at 156. Okay, if let's say worst case raw risk, the distance between strikes, so from 180 to 175 or 230 to 225 is $5. So the risk of this trade is 500, and if you recall our rule, we want to collect at least 15% of the raw risk. Okay, oh sorry, I didn't input the 15% correctly. Now I did. So that is 75. Okay, and it seems that we're gonna collect double and double and double, 1.57. Okay, so even if you collect a little bit less premium than that, okay, as long as it's 75 or more, you are fine. Okay, so the trade is looking good, but we haven't approved the trade yet, because now that we know that we have a possibility to execute something that makes sense based on statistics, reward, risk, and so on, we need to also make sure price has a fair chance to stay within the range, which that implies we need to find the UFOs we need. So how are we going to do that? Okay, well, we're going to look at October 22nd, which is right there. Okay, right there. We're going to draw a line. Here we go. And then we're going to look at October 22nd, which is right here. And we're going to draw a line, which is right here. Okay, here we go. So we have it. Now, let's go ahead and drop to the 55-minute time frame, and let's see if we have UFOs above and below. Probabilities indeed look very good, but it seems as well that I may need to load more data. So let's go ahead and do that. Format. Let's load 5,000 bars for Caterpillar. Okay, so we got 48% or more, so that's good. And when we do this, actually it looks like it's a pretty easy one, because here is a UFO beyond my red line. Indeed, I have more than 2 UFOs. I have 2 or more UFOs above, and here is a UFO below my red line, and I also have 2 or more UFOs below. Okay, and by the way, I am pretty nicely centered, if you wish, because as you can see, I'm not going to calculate it here just to save time, but the visual distance, right, between the blue and the purple line here and here, I would say it's quite similar. Okay, it's quite similar. So we are okay. Okay, so we are okay to accept this trade. And if I go back to the daily time frame, so we will be able to see now our range, which is the purple lines. Okay, not the red lines, but the purple lines. This is where we expect the market to stay and remain from starting today, which is right here, all the way to October 22nd, which is right there. Okay, so this is the place on the chart where, as long as the stock stays there, we're gonna profit. And if it doesn't, okay, if the worst case line, in this case it's the red color, but it could be a blue one at times. So if the worst case line surpasses the purple line, above or below, then we're going to have to act on the trade and apply our trade management rules, tweaking the trade. So I am about to execute this trade, but before I do, I want to ask you if you guys are with me on the process. I think that I kind of feel that today I did a little bit of a better job at explaining it for you guys to get the process a bit more smoothly than what I did yesterday. So hopefully you guys follow me well. But if you need me to re-explain it, guess what? It's only 36 minutes after the top of the hour. So today, I think that it was pretty efficient with the usage of time to get the trade ready. So I am happy to go back, re-explain the whole thing if needed, so you guys get it, because the ultimate goal is that you can do that yourself. Okay, the ultimate goal is that you don't need me. Okay, even though I'm here for you, but I want to make sure you guys are gonna be independent. Okay. Very good. Yeah, greeting you there, Siderman. Yes, I'm using October 22nd. Okay, the earnings are on the 26th of October, so I am using the expiration day right before, which is the 22nd of October, which is the one that showed up here on the trade I am simulating on the risk graph when I right clicked on it. Okay, so I remember making a mistake saying October 15. So I did say that was a mistake when I pronounced October 15, but when it comes to what I picked from the screen, it was October 22nd all the time, and that was correctly selected. Okay, so we are good. With you all the way, all clear, Jose. Maca is all good. Mario, maybe a monthly expression would give better spreads. Yeah, better spreads, but the October 15 didn't pass the filter. Okay, so it didn't pass the filter. Not even, it was failed as a filter. That's why I got on the top October 22nd. I didn't have any of the October 15, and therefore, while the spreads will be narrower, I will not get premium enough to justify this trade I know that because the trade was discarded thanks to the spread select when I activated the filter. So we're going to have to deal with, you know, weekly expiration dates often have less liquidity, and therefore this is where now we're going to be patient to put a trade in place and, you know, hopefully get filled at a convenient price. So let's do it. Okay, I'm going to float the risk graph, so then I could position it on top of Thinkorswim. I'm going to move to CAT. Okay, looking for October 22nd expiration. Sell Iron Condor. Okay, it's all October 22nd, as you can see. Okay, you got the calls and you got the puts. Okay, so now good practices, bring your top screen on top of it. Okay, so you can then, visually speaking, look at the strikes. So the call is 230 to 25. So the one you buy is 230. The one you sell is 225. Okay, so 230 to 25. And on the put side, you sell the 180 and you buy the 175. So selling the 180 and then buying the 175. And if we do that, the expected credit based on Thinkorswim is 154. Okay, here it's 131. Of course, what I got with top is real time. What I got with Thinkorswim, in this case, because I am using a simulated account for the sessions, it's, as you can see on the top, is delay data. Okay. So I'm just gonna go with, you know, 131. So let me try to get, you know, 130, something like that. Here we go, and let's see how much I get. Okay. Remember, this trade has around $500 of risk, $500 minus the premium collected, which is, if it is 130. So then the risk will be $370 for the condor. Okay, so I'm gonna leave it there for a little bit. Okay, I will try to change the prices later because I want to make sure I get filled before the end of the session, so we can manage this trade together throughout, you know, October 22nd. But at the same time, I don't want to do it too quick like I did yesterday, which I did it rushing for obvious reasons. But this time, you know, I want to get a price more realistic instead of the terrible price I got yesterday, okay, with Whirlpool. So anyway, so now next thing I want to do is to copy, position to the clipboard, and then go back to top and add this in the bottom part under Whirlpool. This is our Caterpillar Iron Condor, and then I will customize the prices afterwards whenever I get filled. Okay, so I don't need the risk graph anymore. I just need to customize the prices later. Okay, so good. So this is trade number one. Okay, and now we're gonna be looking at the market and preparing for trade number two. Should we check the options volume map? No, not for a trade of this sort. If any, you could check it. If I was to do it, this is what I would do. Okay, and I'm not gonna do it so we don't overcomplicate because it's not needed. Now, if you are a very conservative trader and you want to add a bit more odds in your favor, this is what you could do. You add the options volume map. Okay, you add, I would say, no weekly options. Okay, so no weekly options. You add, let's say, 10 or 15 strikes above and below. Couple of months out, that's good enough. Okay, you click OK. So here is your volume map. Okay, maybe I took too many strikes and it's kind of like, instead of 15, I'm going to select 10. That should be good enough. So 10, even, yeah, I think, let me see. Edit study, options volume map. I just want to try to get this to not to be that distorted. So what if I do 7 or something like that? Okay, but then the front months, it doesn't have enough strikes. Okay, so yeah, so I'll go for 10. I'll zoom in using the price scale on the right. You'll see me do that in a moment. But here's what I want to show you, okay? Because I inserted the volume map, but what I want to check here is not the volume map. I'm just going to click where it says volume, right? On the date, I'm just going to click. And the moment I click, I converted the volume map to be the open interest map. Okay, it's not the volume map, it's the open interest map. Okay, that's what I did. Okay, and why would you do that? Well, because you see now I'm zooming vertically. Okay, so now you can see what are the strikes that have the greatest open interest. Okay, and you can see, for example, here, so very significant open interest, very significant open interest, very significant open interest, pretty significant open interest. Okay, and on the bottom side, not so much, to be honest. Okay, so I mean, we have UFOs, and well, actually this one is not so bad, but this one you can see is quite weaker compared to that one. Okay, the size of it is much less. So in other words, why is that useful? Because, you know, if you have, you know, a few of those significant strike prices with significant open interest above price, and you have a few of those strike prices also below price, well, those are going to act as very strong support and very strong resistance areas. Okay, and you may not have UFOs on the screen, which, to be honest, in this case you do, right? So in this case you have UFOs lining up with this, but there are times where you may not have UFOs, and this is kind of a hidden UFO, right? It's kind of like a hidden UFO. This is like a support price level or a resistance price level that you don't see on the charts. It's coming from the from the derivative markets, from the options markets. It's derivative data. It's not candlestick data. Is that making sense? So in this sense, you know, you get a little bit of an X-ray of what may potential additional support or resistance price levels could be, and you could get a feel for the likelihood for price to keep bouncing around up and down within the range, which gives you more time for time to keep passing until you get to that expiration date. So let's say, for example, you had nothing that was significant from an open interest point of view. Well, you would expect that stock to run either up or down, and even though it may have been ranging for a while, you may now expect the stock to really start moving fast in whatever direction, because there is not much to stop it if you didn't have UFOs and you don't have strikes with significant open interest. Okay, so you could do that if you want, Amen, but you are indeed making it complicated for yourself, and I think that we already have enough odds in our favor. Why am I saying that? Well, because we have the UFOs, we have the reward risk ratio of the trade working for us, we have the techniques that we're going to have to tweak the trade, manage the trade during its life, all the way to reconverting the iron condor into an iron butterfly. So, you know, we have multiple techniques to keep massaging the trade while the trade starts with a decent probability from the beginning and a decent reward to risk ratio. So with all of this in mind, adding more steps in the process, it's something I wouldn't do for myself. But again, if you are very conservative as a trader and you want to do something like that, it indeed makes sense and will probably add more odds. I wouldn't know how many more odds because I don't do it for myself, but indeed I think it's common sense, and you guys understand the value and the power of what I just explained, while it makes trading to be a bit more tedious. Okay, let me take a look at the next comments here. Jose, am I being paranoid, or does it seem every time we place orders the need drops? Well, if a few of us are placing the orders, of course those orders enter in the system, and you know, market makers got automated systems to try to take advantage of either supply or demand entering a market. So if you are trying to sell an iron condor, you're selling options and buying other strikes, and all of these, you know, will produce a reaction in the pricing provided by market makers, which are the ones that want to be on the other side of your trade. And yeah, there are times where you may see that happen. And by the way, right at the same time when you place the order, isn't it? It's almost like you want to look up on, you know, on the ceiling of your room, and it's like, where is the webcam? Someone is watching me, isn't it? So, but it's okay. It's a normal reaction of intelligent markets, which are the markets we trade today. And that's why in options trading, a common practice is to be a bit patient. You place the order, you wait, and those spreads will restabilize to whatever they need to be, because again, those market makers will also have timings and so on. So if, let's say, the detected supply is coming in, demand is coming in for this type of contract, but then after a while they move the price, but you don't move the price, so then naturally speaking, they will try to come back to where they want it to be, because if not, nothing is happening when it comes to getting filled, and their business is to get fills. Is that making sense? So we need to work with patience, okay? And indeed, your observation is valid, even though it makes you feel like they're watching us, and guess what? They're not watching us, but they are watching our orders, okay? So a good one. Yes. Yes. Go walk the dog. Exactly. Very good, John. Love it. Perfect. I'm loving these guys. You guys are having very, very good observations. You guys know your stuff. You are gaining a lot of experience. So this is fantastic. Okay, so did I get filled? No, the last mark here is 153. Okay, so let me try to edit to see if I get a fill or what. So what if I make it, I'm just gonna go all the way to 1. Okay, don't do that, don't be so aggressive. I'm just gonna do it so I get filled, hopefully. So if I make it 1, so let's see what happens. Okay, and we can see it's still not reacting, which means that the simulation engine on Thinkorswim is detecting that this is not the most liquid stock in the market. Well, Caterpillar is okay. We are using October 22, which is a weekly expression date quite far. And again, we're gonna have to be patient here, okay? So let's be patient, okay? Now let's go for the next one. And I'll take a sip of water. $113 is your mid. Why, this has dropped a lot. Let me take a look at the mid. Still shows as 132 in my case. Okay, mark means the last trade that was taken. Okay, this is the last trade that was taken. Okay, but the mid is the midpoint between the bid and the ask. Okay, so while the last trade was 111, you may get filled at 132 or maybe 120 or 125. Okay, so we'll see. We are moving the market, my friends. Very good. You guys, nice one. You guys keep watching, keep reporting. Let's work on this as a team, because this helps a lot to understand what is it that we got on our hands, especially because today we are all together doing the trade, right? But what about the days where this is happening and you are by yourself and it's like, oh my God, what's happening here? Is it because my broker is not good? Is it because I did something wrong? Is it because, so again, keep reporting your observations on the chat box. I'll comment on it. And also as a team, it creates a good team dynamic that will help you better in the future, okay? Anyway, so let's go for other trades. Okay, I'm gonna bring my matrix back. Well, JPM is gone. Okay, so that one is not available anymore. So then I'm gonna move to my third type of process to find options that are expensive. Okay, the third and last process is to look for options where the top percentage increase in the last 5 days for the CIV mean, is the one we select. Okay. So when I do that, okay, now I end up with a huge amount of possibilities. Okay, huge, very, very long list. Okay, very, very long list. Okay. Yeah, very, very long list. Okay, so look, expiration dates of November 23, that's quite far. So because I got so much to choose from, I'm gonna try to be picky. Let's see if I can be picky. Let me see what's available. So I'm gonna try to stay away from USB, Citigroup. Why? Because banks often don't have that much premium built in, unless something is happening, like in 2008, of course, going to an extreme. But in the recent times I was doing some trades and I did sense that in the banking industry there is not that much premium at the moment, so I will leave it alone. October 27, let me take a look at what's available. October 29, Okay, I'm just trying to be picky here just to see. You know what? I'm going to look at PayPal. Okay, you're going to be like, wow, we just said no financials. Well, PayPal is kind of an exception, where many times in the past they had amazing levels of premium as well as very good liquidity. So let's begin our analysis with PayPal and see where we are at, okay, if that's okay. So with PayPal, we have earnings on the 1st of November, okay? So we can use all the way to October 29, okay? That's what we can do. So then let's follow our process, which is bring the spread select. Oh, you know what? I closed the spread select, isn't it? Yes, I did. So let's bring the spread select. I should not have closed it because I was going to use it multiple times, but okay, it's okay. So when I go for PayPal, we're gonna select short iron condor and nothing else. I am going to select the expiration date. We said we can go all the way to October 29. So I will select all the way to September 24 to all the way to October 29. We will look at the minimum risk that we can accept is 2.5. The maximum, we're going to leave it as 10, is a $282 stock, so we'll do that. Then we will activate the filters and load the template, which is Iron Condor preferred parameters. And with that in mind, by the way, when you load a template, you know it's loaded because you can see its name here. Okay, so that's how you know the template is loaded. Okay, so you were looking at PayPal earlier. Nice, we're in sync, Joan. So from here, now I'm going to go for 99, build 99 spreads, and now go ahead and sort and see what is it that we end up with. So I do get stuff in September 24. So let's begin with looking at September 24, which is here. Okay, and as we are looking at September 24, we can see 295 to 268. Those are the values we are looking for. So do we have anything with 295? No, we got up to 293, but we don't get 295, okay? The next one, it's October 1st. So September 24 is not providing enough premium. So we're gonna get rid of it, okay? Update and build new 99 spreads and sort the filter one more time. So now with October 1st we got a bunch, okay, and with October 1st we are now looking at 300 to 263. Okay, so let's begin looking at the 300 mark. Do we have anything 300? 298. 298 again. And then we move into October 8. Okay, so October 1st is not providing enough premium for us to accept the trade. So what do? Simple. We uncheck October 1st. Okay, and we're gonna do it again, building new 99 spreads by sorting the filter column. Now we are looking at October 8. We have 4 cases. Okay, 301 is the maximum. Okay, 301 is the maximum. So I don't think it's gonna work with October 8 because it would need to be 304. Okay, and 301 is the maximum, so it's not working. So we're gonna go for the next one, which is October 15. This would be the ideal one to pick because of liquidity, is the monthly expiration date. Let's see if that one passes or fails. So we're gonna do 99, and then we're gonna sort, and notice we got nothing. Okay, it jumps straight into October 22. If I scroll down, I will find October 15 at some point, but look at the column on the right, it's fell. Okay, so this is what happened earlier, Mario, just re-clarifying what I meant earlier. So therefore we're gonna uncheck October 15. Okay, uncheck October 15, did I? Yes. And we're gonna redo the trade, okay, with October 22nd and October 29. Okay, and with that, let's see what we can do. So October 22nd, is right here, and we are looking at 310. Okay, so we are looking at 310 using October 22nd, 310, 306. Okay, 306, 311 right here. Okay, so 311 to 258. Okay, so 311 to 258. What is the bottom part for 1022? Okay, 310 to 253, and there we got 311 to 258. Okay, and I believe I said 253 exactly. So 258 is $5 higher, so it doesn't work. Okay, it's very close now, but it didn't work. Okay, so the last choice, okay, the last choice we gotta check is October 29. And we sort, and let's see what we can do with October 29. So far it's quite disappointing. 316, maybe. Let's take a look. So October 29, which is all the way here, shows 313 to 250. Okay, so 313 to 250. So 316 is good, 253 is not. Here we got 316 to 253.99. I would accept that. I'm okay with that. And then we got 351 to 258, 321 to 258. So 258 is not good. Oh, wait a minute. I said it was 250. Okay, not 253. I had in mind the prior case. So it's not good. Okay, it's not good. With PayPal, we are not getting premium with any of the expression days that suggest that, you know, basically allow us to validate the trade. Okay, so no trade on PayPal, but again, you got plenty more symbols for you guys now to check. Okay, that could be valid opportunities for this type of trade. Okay, let me see. We are reaching the top of the hour. It would be funny if once I did, the meat drops further. Okay, 0.94 now. Okay, so let me take a look at what is it that I see from the meat point of view for Caterpillar. So still looking at 132. Okay. And from a mark point of view, it shows 112 on my side, which is delayed, as you know. So, yeah, I mean, you could go as low as 0.75, right? But again, given that the midpoint is 132, I would just persist, okay, to try to get a good price. And, you know, just use a day order. And if you don't get filled, then the order expires at the end of the day. And then it means you're not in the trade, and it's okay. And then you can find another one tomorrow, or maybe find another one now. And when you get filled on the other one, then you cancel Caterpillar if you are not being filled. Okay, so it's not a big issue. Obviously, it's more pleasant when we got filled, but in this case, I am not getting filled. So what I'm gonna do, just to conclude the session today, is I'm gonna do the one thing that I always ask you to never do, which is, well, I'm not going to do it. The natural price is 11. If I change this to a market order, I'm going to get filled at 11. So I'm not going to do it. So I'm just going to leave it like that. I got enough with the bad fill with Whirlpool. I am normally okay to get bad fills, so I can demonstrate the rest for you. But, you know, 2 in a row, it's a bit too much. Okay, so I'll leave it like that. See what happens. It's a day order, as you can see here. Okay, so if I don't get filled before the end of the day, then next Wednesday, you won't see Caterpillar in my account, and if I do, then you will. Okay, anyway, my friends, it's been a pleasure spending the time with you guys. I'm sorry about the video stream today. I really like to, it kind of makes me feel I'm a bit more connected with you guys when the video stream is on. It was not possible today, and sorry for that, but yeah, see you next week. Keep up the good work, and send emails if you need anything, guys. We're here to support you, and Christian and everyone If you need some of the templates I use, any file, anything really, just you just need to email. That's all. You guys take care. See you soon. Bye bye. Take care.